Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we got a market that's moving. The story overnight, well, we do have some PMIs, by the way, coming up today, but the news overnight was that China might exit the zero COVID strategy. And like we're seeing markets all over the place move. So if we come over here to our charts, you can see pretty strong up move overnight in the treasuries. A very strong move up overnight. S&P 500 looking pretty okay too. Gold and silver doing well too. Well, so now that one's interesting because a lot of gold and silver demand comes from China. And so one of the theories has been that part of why gold has performed poorly is because China's economy is doing poorly. And then we come over to Bitcoin. Bitcoin had a weird drop yesterday, but it's mostly going sideways now. And the dollar is weakening here. Is that really all there was? Another thing was that yesterday, just before the close, there was this whole thing about like the treasury refunding that really spooked the treasury market. And I find this whole, let's see here. USD JPY slumps amid fresh remarks from Finance Minister Suzuki approaching a test of the 147 mark. Post RBA. Today sees the commencement of the Bank of England's quantitative tightening, with the first observation focused on the short end. See, this whole thing about like China exiting COVID zero policy is a rumor from Twitter. So like, yeah. I'm not quite sure I see what justifies such a strong move overnight for the treasuries, but we've got some other things to do. So let's switch. YY. I guess I need to come over here and like refresh things. Okay. So here we're on X, right? Good. I guess part of it is first day of the month and everything, but it does. I mean, the only thing I see, I'm just reviewing like my news squawk and everything, like see if there's any stories I missed. Brazilian President Bolsonaro silent after election loss. That's interesting. Yeah, all I see is the COVID-0 thing. Is he really? I don't know. All I'm seeing is just there was the headline that he hadn't said anything, and it wasn't helping because some of his supporters were very upset they lost, aka refusing to accept the result. You read that he accepted? Well, here's the story. Incumbent Jair Bolsonaro has still not acknowledged his loss with any public statements over a day after Luiz Inácio Lula da Silva was declared winner of Brazil's 2022 presidential election held on Sunday. Local media says President Bolsonaro, who is now expected to leave office by January 1st, has not so much as issued any official comments to government ministers. Lula da Silva said in front of a crowd of supporters who were celebrating the historical win Sunday night, "Anywhere else in the world, the president who lost would have called me by now and conceded." He's right, to be honest. To be honest with you, anywhere else they would have called by now. But Lewis said he remains part happy, part worried about the transfer of power, given that he still hasn't called. I don't know if he will, and I don't know if he will concede. Blah 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 blah. That's the headline. Morning, Steven. I don't know, Morgan. It sounds like you're peddling disinformation to me. That's you know what it is. I've decided. Here's what my problem is. Right? Is I just need to go along with whatever the globalist leftist agenda is at the time. Just completely play into it, right? Every single time, and then maybe the powers that be will see fit to blow our channel up or something. That's what we got to do. That's the Reading Brannigan Barrett here. It's a really long one. So I'm not going to read the whole thing to you guys. It sounds to me like he's betting on hawkish Fed tomorrow. Serves you right for reading it on Twitter. Well, you know, Morgan, because the Twitter has been taken over by a far-right extremist, you know, I'm not sure that you can really trust anything that you read there now. This jump that we saw here in the treasuries overnight is a little disconcerting to me. I have a hard time believing that that's all China. Especially when it's like purely speculative. Papyrus IQ, unpopular opinion. I think Elon Musk's rumored $20 a month to be a verified account is a good deal for those that wish to build legitimacy on this site. Mutes replies. So, being a verified account, it bestows certain benefits, doesn't it? Isn't it like consider your account more authoritative? Maybe if I start paying to be a verified account, get a blue check mark. Oh, you know, you guys were saying yesterday that Doge did something, and we never looked at that. Let's go look at that. You told me, I just forgot. Wasn't interested. How big of a rise? This is a little bit. It's a little. Oh, it's actually getting two little jumps here. Went from, so basically it doubled, a little bit more than doubled here in the last 3 or 4 days. So I was reminded of that because the market ear asks, is the Doge rally an early sign of crazy risk appetite coming back to the market and thereby supportive for the year-end melt-up thesis, or is this a peak sign for this current equity bounce, or is this just random noise? Well, I suspect that it's Doge, okay? So it probably is random noise. Probably is just random noise. But it does kind of suggest to me, though, that there is still that the ability would turn into crazy speculation very quickly, right? So I continue to have, oh wait, Nick Timmeros tweeting, one source of confusion for some investors recently is how Fed officials could contemplate slowing the pace of rate rises even if estimates of the peak rate creep higher. The obvious dilemma for financial markets is that many things can be true simultaneously. Okay, so Nick Timmeros, I think, is trying to defend himself here, because earlier they were saying, well, that the Fed is going to discuss how they're going to slow the pace of rate rises. But then they were also saying, well, you know, consumer still looks pretty strong. It could be a very difficult to get a handle on inflation. So I think that what he's trying to suggest here is that the Federal Reserve's policy of higher for longer is prudent. That you don't have to raise rates very much from here to continue having a restrictive monetary policy, but that it might have to be restrictive for quite some time in order to fix the problem. What's this, Steven? I just upgraded this full CML bundle so I can start checking out the treasuries. Can you brief explanation of which one is which? Oh yeah, okay, sure. Okay, so on the main ones, so the main ones that you're going to want to pay attention to are the 5, the 10, and the 30. There's also the 2. I don't have the 2 up. The 2 is a little bit different because it does not have a first in, first out queue. So that doesn't mean that the DOM on the 2 year is different. It's just you'd have to read it completely differently, and I just don't want to bother making room for it. Okay, and the way the symbols go is ZT, T for 2, right? ZF, F is for 5. ZN, the N is for 10. Look, I think that's how they got it. ZN for 10 year, right? And then ZB, the B is for bond, because the 30 year they call a bond, right? It rhymes. I'm sure that when they named it, that's what they... Oh, okay, you're right. N is for note. You're right, Morgan. N is for note. Then there's also TN, which is the ultra 10-year. So that one, again, I don't think you have to watch, but I would expect the 10-year to become more important over time. Okay. That's TN, right? And then there's the other one is UB, which is the ultra bond, which is like a true 30, right? So the whole thing is that these treasuries are like deliverable, right? And there are certain QSIPs that are eligible to be delivered. And in the 10-year, the range of QSIPs that can be delivered is very, very wide, right? So it could be as old as, it could be a 7-year treasury, and it could be like a 10-year treasury. Whereas the TN is basically has to be a 10-year treasury. There's a proposal by the CME to limit ZN so that it's only the 7-year treasuries. Because what happens is, because it's deliverable, there's a certain QSIP that will be cheaper for a holder to deliver. And so the price almost always follows the cheapest to deliver. And as the interest rate changes, the cheapest to deliver could shift from being, you know, the bond with the shortest maturity or the bond with the greatest maturity. So right now it's the bond with the shortest maturity. And if interest rates got above 6% or whatever it was, yeah, above 6%, then it would be the longest maturity. And that would be like a really big shift for the 10-year. So they're saying, let's just keep it a 7-year. Anyways, I digress. That was all irrelevant. But those were the names of them, right? And then there's the micros. So the micros just go, it kind of depends on your platform, but the micros just go 2Y or 2YY, 5Y, 10Y, 30Y. What is the 2-year floating note rate that they auction off? So are you talking about like when they do the treasury auctions like they did earlier in, like they did last week, right? So that is the primary market. And what contract are you on? So we are on December right now. So we're ZN Z2. So for the main ones, they're on December. They shift every 3 months or every quarter. And the micros, those shift every month. So now that it is the month of November, we're on X, 2YX2. Why do I suck at trading? Everybody sucks at trading. That's the whole thing. Do you know why a bank would buy a floating note rate as opposed to a 2-year? I'm not sure what you mean by that. A floating note rate. I think so. I think that when you're talking about a floating note rate, you're talking about a note where the interest rate that they pay varies. FRN is tied to a benchmark rate. Oh, yeah, floating note rate. So I think it's just like a 2-year, except for that the coupon that you get every 6 months isn't set, right? Because the way that it works, it's kind of once you kind of understand the rules of it, a lot of the math makes a lot more sense. So the treasury notes in particular pay interest every 6 months. So twice a year. So if the interest rate was 1%, then and you had $100,000 note, you would get paid $1,000 every 6 months, and then at the very end they return your principal to you. They return you the $100,000. Earlier I used the term the primary market. So that's something important to know, is that the Treasury every month or so will do an auction where the U.S. Treasury, that's the organization that Yellen is in charge of, right, will auction off notes in a primary market auction. So that's where it goes to the primary dealers, right? So what typically happens is, well, first you can buy them at auction if you want. You can do that through treasurydirect.gov, right? And I think the way that it works is like regular people are in line first. If I remember how this all works, the regular people are first in line, and then what the people don't buy, the primary dealers are obligated to buy the rest of it, and they'll buy it up until whatever interest rate it ends up being, which is why they talk about like an auction tailing, is basically they had to keep reducing the interest rate that they were going to give at the auction until the primary dealers were able to take it all. Okay. So that's called like the primary market. So then if you go and you take that bond and you go to TradeWeb or BrokerTech and you sell it on the cash exchange, that's the secondary market, right? Just like the stock market, like the stock exchange is considered a secondary market, right? But what we trade here is, interestingly enough, is not either. It's a derivative, right? So Zach, where do you think you're having problems? You take a trade that you didn't think you should have, or are you having a string of bad losses? And there's actually a couple of different interesting kinds of treasuries that we don't talk about as much. The ones that we trade, those are like the benchmarks. I can't stick to one thing. I really can't. Okay, so first of all, are you ADHD or autistic of some sort? Because that sounds like an ADHD autistic sort of thing. If you are ADHD, I highly recommend getting medicated if you're going to trade. There you go. So when you trade, you take like Adderall or Ritalin or whatever the deal is? So if you're ADHD and you're not medicated, I really like it's such a bizarre thing. I think is bizarre the right word? I always question the adjectives that I use when I try and describe like an idea. Okay, people with ADHD are extremely likely to be interested in the market. In terms of a stimulus, an intellectual stimulus, there is no greater source in this world than the stock market to keep somebody with ADHD interested. So it is extremely common for ADHD people to get into trading. But the symptoms of ADHD are very, very much work against you when you're trading. So, yeah, it makes it difficult for you to stick to a plan. It makes it difficult for you to stay focused. It makes it difficult for you to exercise self-control and stop trading when you need to stop, etc., etc., etc. I have a watch list a mile long and 50 plus books, but no focus. Yeah, so if you have ADHD and you're gonna trade, I really highly recommend being medicated during the time that you trade. And for someone with ADHD, because I'm not a doctor, so I can't say that you need medication or whatever the deal is, right? So you need to go to a doctor. And one of the mistakes that I think a lot of people with ADHD make is they just go to their general practitioner doctor. I would really recommend going to somebody that specializes in ADHD. There's usually at least one in every city. and get it prescribed from them. Especially since you're gonna have to go back and see them every 6 months to get your prescription renewed, and then they can talk to you about how it's doing and stuff, because it can change over time and things like that. So and like finding the right amount is really takes some expertise. Okay, so if that's you, I really highly recommend you get medicated. Seriously. Steven says he has a place in Tampa. I wouldn't be surprised if like well over half of my stream is ADHD like me. Because non ADHD people probably come in here and are like, what is with this guy? He's all over the place. He can't stick to any one subject. His mind skips around. Regular people, they might not know what's up, but like they'll pick up on it almost immediately, and there's a lot of people that are just like, no thanks. Now me, I take 2 medications. I take one medication that is like a antidepressant type of medication, and that does a pretty good job of keeping me level all the time. Really helps me control my emotions. And then on top of that, when I need the extra focus, I also take the Adderall. Right. So that helps. That helps me a lot, and it helps me in the trading a lot, because the Adderall alone didn't give me the same control over my emotions. I don't know if you've ever heard this explanation before, but like, you are not your emotions. You are an entity outside of your emotions that can choose which ones to act upon. But when you're in ADHD mode, those emotions come out well before you're ever able to think about it. So you're not able to do that. Right? So what the ADHD does is it strengthens those executive functioning neurons in your frontal cortex to stop them and say, okay, wait, you want to take a trade, but does this fit all your qualifications? Right? Is there an active reason for you to trade? What is the predictor of order flow that you have? Is the location that you're trading here all right? Is there some sort of news or something else coming in the future that might make taking a trade in this particular location inadvisable, right? It helps a lot. And if you take Adderall when you trade, you will trade better. Well, I shouldn't say you will, but I think you'll find that it'll help you. But another side to that is when you're saying I can't stick to one thing really, that also kind of sounds like noise trading. You know, that sounds like I've got a bunch of things up and I'm looking for a pattern, and I see this pattern in this thing and whatever. But think about my approach. I only enter my orders in like one instrument, maybe 2 instruments if they're like really heavily correlated or related, right? And I'm only taking a trade when I find a piece of information that suggests that I have a really high probability of predicting the future orders, right? Then I use my order flow and everything else around that to say, okay, am I getting enough confirmation? Do I see signs that there is a large meta order out there pushing us? Is the location that I'm getting good? What's the liquidity look? All of these things, right? So what actually prompts me to want to take a trade changes every time, right? But in the end, that actually ends up being more restrictive. A lot of you guys complain that I don't take enough trades. Stream would probably be more popular if I was constantly in a trade, right? Oh, the thing I take for the antidepressant thing is called Strattera. So it's a norepinephrine reuptake inhibitor. So the thing that's weird about it is that like some of these, well, okay, so for ADHD you can kind of have, there's two different classes of problems. Okay, one is that your brain does not produce enough of the neurotransmitter, and two is that your brain cells will uptake the neurotransmitter too quickly, because there's these little vacuums and some people have too many of these vacuums, right? Interestingly enough, plugging up some of those vacuums also seems to stimulate the production of more of the neurotransmitters. So it kind of has a double effect, right? So things like Ritalin and Adderall will produce more of the neurotransmitters, basically stimulate the production of more neurotransmitters, right? And they're kind of like, there's different, well, there's two main chemicals that people in ADHD tend to be deficient in: dopamine and norepinephrine, right? So Adderall is more the dopamine side, and my understanding is that Ritalin is a little bit more norepinephrine, but it's kind of subtle, right? But then the other issue is, where does it get delivered to? Like, which part of the brain does it actually stimulate the release or work on, etc., right? And so that's kind of where these different antidepressant style medications might kind of get to different places. So like the Strattera seems to go more just to the frontal lobe, whereas the Adderall seems to affect a lot more. And in particular, the Adderall seems to affect the limbic system, which are like the emotional centers in my brain. So like if I'm just on Adderall and I'm taking enough of it to really focus and, you know, resolve that symptom, it completely kills my emotions, right? So, but when I'm on the Strattera, that doesn't kill my emotions. So I'm able to do the Strattera and just a little bit of Adderall to get the dopamine so that I can be motivated to do things, essentially. When I'm depressed, I eat a lot of nuts and bananas, and that helps. Well, yeah, so this is another thing, is if you are ADHD, like proper diet, it helps, especially getting enough sugar into your blood. So a lot of people that are on Adderall, they tend to be too skinny and don't eat enough. A lot of people with ADHD can be skinny because they lose interest in eating too quickly, so they don't eat enough calories, right? Vyvanse, my understanding is Adderall, but a time release one. I think that one is the one that's like a bunch of different little capsules inside of it, but I can't recall. There's one that's capsules and there's one that's kind of like a tube. I don't know which one is which. But Vyvanse is one of those. Here I am talking about ADHD. Probably shouldn't. You gotta be careful about that sort of thing, because I don't want to give medical advice, but I can give like general information about what I've learned about the condition. But I'm not giving any advice specific to you, right? That's for your doctor. So one of those things that I really learned in my Series 65 exam about an investment advisor is you can come in and you can give general advice to say, well, like for instance, you don't want to have it, or it might be a bad idea to have all of your retirement funds in stocks, because if there's a crash, you could lose 50% of your funds. And so as you get older, you might want to move more of that over into more safe assets like bonds or bank deposit notes and things like that, right? So that's me giving like general advice to the public. Whereas if I say, okay, here's everything that I know about you, so I think that you should buy X, Y, and Z. Now you're being an investment advisor, right? And you shouldn't be doing investment advising unless you are a registered investment advisor representative. Right? And so there's probably a lot of places where that rule should hold, and maybe it's not like the law, but medical advice is certainly one of those situations, right? I can give you general advice, but I can't say this is what's right for you in your specific situation. You need to seek out the advice of a doctor, right? It's also why there's this whole thing about engineers. Have you heard about this thing where there was a court case in Canada that basically said you can't call people software engineers? It's because in Canada, it's actually, there are some spots in US law too, but it's not nearly as big of a part of the law as it is in Canada. But so just speaking from US law, a tax advisor can give incidental investment advice without being considered an investment advisor, right? They can say, well, if you invested in this, you'd pay less taxes, right? So as long as it's not a major part of their business and the advice is incidental, then they're not considered an investment advisor, right? So engineers, right? But they're basically in that category because they're a tax advisor, right? Lawyers could also end up giving, investment advice. It would be incidental to their overall practice and would not have to register as an investment advisor, right? Did I lose you? Okay. So lawyers, tax advisors, and engineers could all end up as a part of their regular practice having to give investment advice. And as long as that investment advice is not a regular part of their business and is incidental to their business, they don't have to be registered as an investment advisor, right? So there's that thing, is like, it could be an engineer could in certain situations. Well, why is that? Well, because maybe you're an engineer and you're working on a road project or something like that, right? Or a building, and there could be certain things about the way that you build your building that might change what kind of revenue you'll need in the future to upkeep it, or things like that, right? And when you think about an engineer, there's all sorts of other cases that would be outside of investment advising where there might be laws about it specific to an engineer. It's like, well, if you're an engineer, if you give advice on how to build a building and you're not an engineer, then that's a problem, right? So that's why in Canada, like, an engineer is like a specific, right? And the whole thing is that they don't have anything like that for a software engineer. And so they say, well, since software engineers aren't accredited, you can't be called a software engineer, basically. It's because basically the law is antiquated, right? But the point was, some of these terms matter, right? So in our field, somebody that's giving investment advice is a investment advisor representative who works for an investment advisor, registered investment advisor. Somebody that gives medical advice is a doctor, right? I am not a doctor. I'm not a registered investment advisor yet. But I kind of wonder, I guess, I don't know why I'm getting all that. Why I got on that. I guess I was just being ADHD. Yeah, I've been thinking a lot about like social media though lately. Have you been watching this stuff that's going on with Twitter? So apparently hundreds of employees had access to the tools that allowed them to moderate Twitter, and Elon Musk has basically shut them all out. So the automated stuff still works, which by the way means, don't tell anybody this, but I think that means that like mass reporting attacks are probably like especially effective right now. But I digress. And Elon is saying that the rules they have, they're too broad, which I agree with. It's like, I think that they should be able to ban somebody for providing election misinformation. But I think that providing election misinformation is too broad, because then you can come in and you can say, well, if you don't accept, or if you suspect that there was fraud, then you're spreading election misinformation. That's too broad of a use of that category. So I would say that it needs to be more specific. It needs to be, if you are providing information that is incorrect about polling locations, then that is a clear violation that you can get banned for, right? Something that would basically disenfranchise somebody, right? If you're providing information that would essentially disenfranchise somebody because they would go to the wrong location or incorrectly think that they can't vote when they can, etc., then that's a bannable offense, I think. And there are people that were doing that, okay? There were rat fuckers out there doing that kind of stuff. Too vague and they're too arbitrarily enforced, yeah. I think that a social media company should be allowed to enforce whatever kind of rule set that they choose, but that they should have their feet held to the fire about what the standards are that they set, and if they're not enforced fairly, right? So if you're going to have something about you could put in your platform, you cannot question the results of an election. If you really wanted to include that in your platform rules, you could choose to do so. But then if you go and you ban Donald Trump for providing election misinformation, and not that what's that, the lady from Georgia, and you don't ban her, then you're not enforcing it fairly, and they should be able to sue you, I think. Like I think that companies would be a lot more specific about what their rules are. Stacey Abrams, yes, that's right. If you ban Trump but not Abrams, because she's been doing the same thing, right? Then you're not enforcing it fairly, and your users should be able to see you. And then companies would be much more careful about what rules they set and how they actually, the system that they actually use to enforce them, right? Because the honest truth here is that it's like people in third world countries that are basically moderating all of the content, right? Is that they rely on a robot to detect a violation, and then a human has to look at it and determine if it was actually a violation. That's kind of a problem. But going back to less moderated content might be a good start. Wow, that was fast, Uzi. Did you do that? That was fast. I appreciate it. You got one of this spam bots came in and they almost immediately caught it and silenced it. But I'm kind of detecting like this sea of change. So like all this stuff is going on at Twitter, right? Meanwhile, Facebook is falling apart. Like think about Facebook for a moment. I think that people on Facebook have become so focused on Facebook's current woes that they're kind of missing like some of the bigger problems at the website, right? So the big thing right now is that Mark Zuckerberg is obsessed with the metaverse because he's autistic. He's probably autistic and has become obsessed by this and is making poor decisions as a result. That's what I think. Okay. But was that shift to the metaverse really what got Facebook in this situation? I don't think it actually was. I think that they actually had a lot of problems before that. Dude, bet the farm on the Great Reset. Yeah, I mean, maybe that's part of why he's so focused on, on VR, because he thinks that everybody's going to work from home forever. But, I think the first problem came about when they found out that they were selling users' data to people that shouldn't have been getting our data. That was problem number one, right? But then the big one, the one that really killed Facebook, remember, was when Apple changed the iPhone policy to basically lock out Facebook from any kind of advertising information. So if they can't track you so that they can serve you ads that are directed to you specifically, that just kills their profitability, right? Apple basically locked you out, basically locked Facebook out so that they could get all of the revenue for themselves. So what does that mean when you game that one out? Really across the board. So another one that I see right now was Elon Musk. Elon Musk was talking about, hey, we should bring back Vine. Well, why did we get rid of Vine? We got rid of Vine because it wasn't making money. Well, now TikTok is making money, is it? Well, like the thing that killed Vine was all of the creators all at once decided, hey, we should be able to make money, and Vine said no. So they all left, and then Vine died. That's really what killed Vine. That's really what happened. Whereas on YouTube, they're gonna start giving you money for shorts starting next year, and you get like 50% of it, right? So it was like the entire model, the entire business model on these social media websites is falling apart. In other words, big social media is failing, right? Or at least it's gonna go through a revolution, and what we come out with on the other side is gonna look very different, right? And one of the places where I think they have the biggest problem is the moderation. Moderation basically becomes a huge overhead cost, especially if like people could sue you for it, right? So where are we gonna go from here? All I know is that like the entire internet is changing in the next 2 years, and I don't think that people quite realize just how drastic it's about to be, because it's really like every platform except for YouTube. Like every platform except for YouTube is going through some sort of pain, right? And I think the only reason why YouTube is able to escape that is because they've put such a focus on their creators, and their creators make money from it. That's the only thing, because if people were to look under the hood of YouTube, you'd probably see pretty similar moderation problems to Twitter. MySpace had that feature that when you think about it is actually pretty useful for a future workforce, let you code on your own page. Is Web3 going to be a thing? I don't think so, to be honest with you. The technology is just not actually very effective, right? It's a whole bunch of work. So here's my challenge on Web3. Okay, if Web3 is going to be a thing, show me Web3. You give me a link where I can go and it's the Web3. Doesn't exist. The technology hasn't quite gotten to the point where you can really use it as like a host stuff. Use the blockchain to host stuff. Really what's happening is like you have some token that redirects to some website that you have somewhere. It's kind of... Well, I think that what happened, no, I know why that changed. Why did social media abandon the feature where you can code on your own page? Because MySpace pages became a complete clusterfuck. It's the technical term there. I don't know how else to explain it, but it was like you'd come in, they'd have music on their page, they'd have all of these crazy animations and stuff. It was like, it was painful to look at. That's why, like, when Facebook came around, it was so much more popular. It was the Web 2.0 revolution. And what was, I think people forget about what the Web 2.0 revolution really was, because yeah, there was like social media and stuff like that, but really the Web 2.0 revolution was a cleaner web. It was basically the point at which they said all of these unprofessionally designed web pages with crazy animations and all this kind of nonsense everywhere isn't cool anymore. We want something that's clean and simple and gets the job done. Yeah. So, interestingly enough, Facebook had an answer to it that was even better, right? Anybody could go in and make their own Facebook app, right? And they made games. So then you had Farmville, and that was like super popular. But then like what happened was people would just spam friend requests and things just to get into Farmville, and that was kind of annoying. So then Facebook kind of killed that too. Isn't that kind of weird? But I do kind of wonder why they didn't. I thought that the utility was something that could have become more like, I was excited to see, okay, like, so Farmville is cool. What's the next iteration of this? And the next iteration of this was answer this quiz so that we can record all this information about you and sell it to somebody else. And I think that's kind of why it died down. Yep. So then we've reached the point where Facebook has no utility. It's a glorified photo bucket account. Yeah, it basically became Twitter, right? Basically became Twitter, but with longer posts and images. Did. And it's more for your family. But you know what? There needs to be a website for that. I think there needs to be a website for that. But it kind of begs the question, where is the value coming from? Well, I can identify one place where the value is coming from, on Twitter, right? Because I get world-changing news and information out of Twitter, right? The problem is just like, how do you filter through all of the trash? Okay, but like there's an instance where there's like value. I think there's value in a live stream, especially with small groups. We can work together, and live stream is super, super effective. I think that we've been able to help traders become better traders in a way that wouldn't have been able to do any other way. Same with Discord. Discord is a really useful platform for small groups. And that's what I'm thinking. I'm thinking that the next evolution of social media should be smaller groups. I think that we went and everybody wanted to have the big platform that was the whole world and everybody was on it. And we did that and it kind of sucked. And the thing that was always cool about the internet was having small, really interconnected niches, right? Where everybody that comes on this stream, I recognize almost every name that I've seen this morning. You guys are here every day. Even XYZ, I'm pretty sure this isn't the first. I mean, you don't speak as much, but I'm pretty sure this isn't the first day you've spoken. You hate Discord? Oh, that's interesting. No, there was the other day, was Laszlo is this guy's name. He's kind of focused on DevOps for machine learning, because a lot of machine learning developers don't write very good code, and it's like a really big problem in that space because they can't really do anything because their infrastructure is so bad. So they made a Discord, and everybody complained about that it was a Discord and not Slack. but Discord is so much easier to sign up for and get working. I like the fact that every time I exit the Twitter app, it opens back up where it does it. Mine doesn't do that. Morgan K, I miss forums and blog posts. Well, you know what killed blog posts was all of the freaking spam, man. Right? Everybody realized that it wasn't about actually providing value. It was about putting enough keywords on your page and then getting people to link to your page. and then not only that, but like it kind of wasn't to your advantage to host it yourself, right? Like medium.com really took that over. But there's still really good content on Medium, right? But forums, 100%. Like I don't like Facebook groups, and I don't, well, I mean, Reddit has its place, but Reddit doesn't replace a forum. Now all of the good info is hidden behind Discord or another paywall. Oftentimes it seems like that. I think that's why, they were saying that one of the strongest use cases for TikTok, or like the most growth use case for TikTok, was people were searching TikTok for information because they were finding that they couldn't get it from Google anymore. Which really speaks to a problem at Google, right? I'm frankly, if you talked to me like 30 years ago, or not 30, 20 years ago when I first learned of Google, I would be really shocked to hear that it's gotten to the point that it has, because Google was so much on top of that stuff, Yeah, Google has been particularly bad lately. It's like, if there's not an approved answer to something, then the information that you get is trash, right? It's pretty bad. I mean, you can still use Google to search like news articles and stuff, but like if I want to, for instance, I want to learn how to make a bone meal farm in Minecraft, but the 19.0.4 update destroyed the hack that everybody was using to make infinite bone meal farms before. So what's my best option now? And there's not very good search results for it, because they're out of date, right? And then so if I say, okay, so only stuff since that patch change, then you just get trash that's not relevant to your question. Yeah, it's been destroyed. How did I get to that point? Well, I think that giving tech companies so much easy money for a decade probably didn't help, right? You got to make them work for it. But still, with all that said, isn't it a little exciting? Because personally, I feel like since 2015 or so, we've been living in like some sort of dystopian nightmare. This is like the internet just kind of went over the wrong way. It was like all of a sudden a certain group of people got in charge of all of the content, and it all just went to trash. And I loved the internet before, and now I'm like, It used to be that I could just continually browse forever. Not anymore. 2012, we all died and we're in hell now. So I hope that things get better, but the answer could be that social media just kind of dies. So like, everybody's been plugged in, and maybe it turns into not very many people being plugged in anymore. That the only people that are really plugged in are like influencers and news people on Twitter, and that's it. Makes sense, maybe. Oh man, it went downhill since Google discontinued Reader. I was so shocked when they did that. There's, what is it? Feedly? I think is what I replaced it with. Yep, feedly.com. And it actually like copied what you had in your Google Reader. Yep. I don't visit it as often as I did though. You used to have information, and I had my couple of subjects, and I read everything about that subject, and I learned a lot about those subjects. Kind of think about it now, like especially with like DJ and producer stuff. I know a lot about DJing, and I learned a lot of that from DJ Tech Tools and reading every article that would come through there, for instance. No, the bottom is in. I missed it. What? You just saying you wish you had been long all night? I'm a little suspicious of this move. So it looks to me like the key driver behind markets overnight was rumors that China is going to ditch their zero COVID policy. And it's just a rumor on Twitter. Like, that's really what moved the market? Okay. Suspect that it could be something else, but I don't see what it is. Yeah, I didn't really see any dollar news. I mean, the dollar didn't really move that much, though. Like, it's lower, but by like what? 50 cents? I think the non-farms is going to be big. Yeah, I think so here's what I'm concerned is going to happen is the Federal Reserve's going to come out and they will be, they'll do 75 basis point hike, but the rhetoric will still be somewhat hawkish. But overall, the market will be okay with it because there's like so much options activity and so on and so forth around the event that you might actually see a little bit of relief afterwards on Thursday, right? And then the non-farms come or the CPI comes and it's like a total gut check, right? Like I'm worried that the market is at risk of thinking that everything is okay and getting ahead of itself and then just getting tripped, feet completely pulled out from underneath of us. But another part of me thinks that the numbers are likely to be okay. Like the thing is we've raised interest rates really aggressively. That should hurt, but there's still some really strong parts of the economy, relatively speaking. It's not a jobs recession, and interest rates were really too low anyways. 4% is like a historically normal rate. So that says to me that like the world doesn't have to be the apocalypse, right? So a lot of people think that like the apocalypse is just around the bend. Maybe not. I think that overall things be pretty okay, but there's just like a strong risk of it just all falling apart all at once. Is kind of a minority case, but it's there and everybody's worried about it for sure. Well, the treasuries are coming back down pretty hard. Doesn't look like 07.5 is 4% anymore, does it? It's because you keep seeing there's been flattening in the yield curve this whole week, really. Especially in the 2s and 10s. Oil is doing really well today. Well, the top winner today is silver at 4.26%. Yeah, this is the thing, is trying to catch the exact... You don't have to catch the exact bottom, do you? There is someone on TikTok having some of your videos trying to scam people crypto related. So just about any influencer that attracts any degree of a following will probably attract something like that. You should report the accounts. I don't know if there's a whole lot else I can do about it. I'm speculator Seth everywhere. I don't like Facebook, and I didn't understand the shift to Instagram. It was just like all of a sudden everybody that I knew was using Instagram. Like so it used to be that like Facebook groups for the rave groups were the rave scene happened. And then everybody moved to Instagram, and it really fractured the community. It wasn't nearly as, it kind of sucked. It was a lot harder to keep up on things, and I just kind of gave up. But I just didn't understand Instagram. I'm like, okay, it's the same thing, except for that you can only post pictures, and like the only advantage is there's better filters. Like, that makes sense to me. This is another one of those times where when I look at my DOM here, I'm like, wow, that's a really consistent, strong downtrend. But then when I look at my chart, I'm like, that's nothing. It's just a sneeze down. But I'd agree with what Uzi said earlier, that the action is a little slow still. I'm not getting like, oh, there's like really significant stuff going on right now. Now we've got like ISM numbers at the top of the hour. We also get the S&P manufacturing PMI here in 10 minutes. So there is going to be some stuff coming, right? So, I didn't go through Twitter here to see. Anything here on Twitter? Oh, actually, I did a little bit. What do I think the average return per year for someone day trading futures is? So if we took all futures traders, their return on the year and averaged it together, I think the average would be negative 99%. But what do I think would be a reasonable return per year? I think that if you're doing futures trading and you're able to make 10% in a year, you're doing really good. Like if you're able to trade 5 years in a row and your average return is 10%, you're doing pretty good. So the thing is that the leverage allows you to like double, triple your accounts and everything. But when you're constantly doing that, the chances of you blowing your account are extremely high in that kind of a situation. People that are really managing large sums of money and doing this for a living, they're making like 30% would be like rock star performance. So, maybe keep that in mind a little bit when you consider like what's practical. Yeah, what is the point in trading when I could just invest in the S&P? And that's the other thing is that day trading, essentially what you're doing in day trading is you are giving up a certain amount of return in exchange for less variability in your returns, right? So if you're doing day trading correct, the way that I think that it should be done, I mean, I guess you could be using day trading as multiple different strategies, but generally speaking, I think that you're going to get a smaller overall return, but a higher Sharpe ratio. That should be the objective of day trading, is a higher Sharpe ratio. Because the whole point is to be able to like make a consistent living off of it, right? But to really do that, you would need like $1 million anyways, right? So then is it practical? That kind of approach to it is practical. So then maybe the point of futures is to YOLO in, and I don't know. Today is a good example of how important rates are to the market, with indices, treasuries, and commodities all trading very correlated and inversely to the dollar index. Like as we're seeing these treasuries continue to fall here, we're getting a trend in the dollar, and it looks like that when the dollar bottomed was when the treasury started changing. Yeah. So maybe it really is just all about the dollar. Is yeah, well, actually it has. Yeah, even oil is following the same as well. But that again, it brings me back to like, is this all because of rumors that China's going to give up zero COVID policy? Could be. Oh, I didn't see Steven's message here. He sent me a link earlier about DHS link proves government conspired with big tech. That I read that story, and when I first read it, I was like, well, I'm not surprised. But like the deeper I went into it, the more like messed up I realized it was. Because like the thing that I think is messed up about it is it was the Department of Homeland Security. What business does the Department of Homeland Security have in doing that sort of stuff? You know? This is exactly what everybody warned us the Department of Homeland Security would turn into. Businesses are just day trading with extra steps. This comes back to this speech I was giving about mentality. Okay, like your mentality definitely has a lot to do with your success in many respects. But this whole idea that you can just manifest it is nonsense. Okay? You can manifest all you want. If your trading strategy sucks, your trading strategy will suck. And that's why the vast majority of retail traders fail. And there's a lot of people out there telling people, oh, you just got to manifest it harder. So they keep doing, like, you notice, like look at everything that they say to retail traders, right? It is all geared towards trying to keep you doing it as long as possible. Not to making you successful, but just to keep you trading as long as possible is really what it's all about. So they're basically like, well, you know, it's all probabilities. So if you didn't win today, you just got to keep trading, right? And it's like, okay, how long are you going to trade that before you decide it doesn't work, right? But the whole thing is designed to like keep you trading as long as possible, even if it doesn't work. It's not mentality. It's you have to actually have a strategy that gives you an advantage. You have to actually know something that other people don't. And just doing data mining on a one single time price series is you're probably not going to find an edge doing that. You don't. How many bad trades have you told this year? I mean, you don't post them that often, though. The issue I would take with that in terms of like holding that up as a record is that we're not like taking, when you say those things, we're not necessarily taking specific trades with set risk parameters that we could really track. You know what I mean? So we would be very likely to want to over extrapolate our results, right? So when I come in and I say, I think we're going to move up, and I might not tell you what my stop is, but I do have a stop, you know, that's like a real trade. I could come in and I could say like, we're going to move up. We're going to move up today. I just know it. And then if it doesn't move up, I can just say, oh, well, you needed to wait longer. And wait until like we move up, right? There's some people that have done that where they're like, oh man, they were like going against the action, super risky trade, and they like held it overnight and over the weekend, and like eventually got a teeny tiny little profit out of it. And I'm like, he didn't actually know anything. He just took on an insane amount of risk. You know, but to the point, I don't want people to I want people to rely on empirical evidence more. So there's the S&P numbers. Not too much of a reaction. It looks like the S&P 500 is interested in it though. So it was hold on, let me make sure I got this right. 50.4 versus expected 49.9. So a little bit better than expected, which isn't good for treasuries. So probably push the treasuries down if they do move. Well, 09 is VWAP, right? So that's interesting to me. Looks like the S&P is not happy about it. Anyways, the whole thing is that like, what is actually our goal, right? So if your goal is, I want to make a living day trading, it's okay having that as a goal. You just have to realize that it's more rare than like getting into the NBA. Okay. So you just got to realize that. Okay. So if you'd say, well, that's not a realistic goal for me, then what is my goal? Well, just be able to come in and to be able to continue trading it. I think that's a laudable goal. Like that you can at least make your commissions and stuff and your data fees. That's a good goal. That's a good goal. Okay. So that's one way of taking it. But then like, if that's what you're trying to do, then what's the point? What's the point? Because ultimately you'd want to be doing better than that, right? Otherwise, why do it? But maybe the reason you do it is because you just love the markets and you want to know as much about the markets as possible, right? So if that's what your goal is, then wouldn't it be more important that what you know about the markets is verifiably true? Well, in any instance, isn't the important thing that the things that you know about the markets are verifiably true? This is why I just hate that everybody's always looking for past performance and gurus to decide who to learn from. Really, what you need to do is you need to look at data in this field. It's a different field. Like that's where day trading is different from trying to get into the NBA. Is that if I'm trying to get into the NBA, if I have the chance to practice regularly with Michael Jordan, I'm going to do it, right? But in the day trading world, if somebody had success, it's more likely that it was luck than skill. That's just the way that it works out, right? So you can't, even the top gurus, even like very successful past traders, I don't think that you can just take their performance for granted. I think that you have to verify anything that they teach, that it actually is true, because they could have an idea about markets that's absolutely false and still made money just because of dumb luck or something, or like all their profits came from one trade, you know, that sort of a thing. I heard the opposite. It's easier to become a profitable trader than becoming a pro athlete / artist. I mean, I don't know where we would be able to get like hard statistics to like prove that one either way, but I'm going to say that it's more rare, because it's literally like 1% of traders that become consistently profitable, and the other 99% of them lose their money. I don't know of any field where success, like the difference between a normal person and success is so drastic, right? Although I think the one difference is that everybody can have a chance at day trading because it's a mental thing. Whereas to get into the NBA, you need to have certain physical advantages, right? Trading is like everything I like to compare to fishing. But like, I guess the point of all of that is that trading exists in a unique place between empirical science and competition that nothing else does, right? Like we could compare it to chess, because chess is an intellectual game, but chess is between you and one other person, right? And if you have an opening move in chess, that doesn't necessarily like ruin the move for everything else, you know? Yes, but if one person takes one trade, yeah. But the stats that I had was that even for the people that stuck around for multiple years, that 60% of them failed. Right, it's pretty crazy. I don't know. I think that those stats make sense too, because like I said, the whole thing is set up to keep you trading as long as possible, regardless of how effective the method that you're using to trade actually is, right? So how do you avoid that? You have to have proven verifiable data. That's the only way. That's the only way around that problem. It's like science. There's these things in science where we're trying to explain certain phenomenon and we can't, and it's very difficult. And then eventually somebody comes up with a theory. They're able to get together a couple of mathematical equations and show that the world really does function according to this model. Like, this is how Newton's laws came about, for instance, right? And then we can look out in the world and we can verify that the world generally follows those rules, right? That's the science of it. But then there's a competitive side, because, you know, if you find like a statistical inefficiency, it gets removed from the market, right? So it's very similar to a bunch of things in certain ways, but it really, trading really sits in this unique intersection. And as a result, we have to treat it differently. So everybody wants to treat trading like you're learning a sport, where you go and you find an expert guru, or like you're trying to learn karate. You go and you find the guru guy, and he teaches you how to trade, right? The competitive nature of trading makes that kind of arrangement ineffective. It's not like Karate Kid, where, you know, there's two main senseis in town and you learn from both of them. And yeah, no, it's not like karate. Well, so they had a pretty decent move down here off of that news. That the treasuries appear to be recovering here. They're just barely below 4%, so now would be a good time to be like, okay, let's say that I wanted to go short here. Okay, well, do I have a very good reason to go short? Well, it seems like it's coming from the dollar. It might be because of the China thing. So I think that, and then we did just have ISMs. So I think I probably could justify that we have something that might be able to predict the order flow, although I'm not 100% sure that it's long or short, but we definitely have something that could drive us. From the perspective of like positioning everything, maybe 06 half would be okay. I think that 07 half or even the view up at 09 would probably be a little bit better, but I would say it's not terrible. But then, oh, we have news in 5 minutes, so we can't take a trade, right? But maybe after the news, we might be able to do something. I tried explaining trading to a person in their 20s the other day, and I realized I am a lunatic. Well, but like, okay, so hold on. Little news squawk is talking in my ear. The thing that I think is funny about it, no sound. Can you not hear me? I've been talking to myself this whole time, but then how do you know what I'm talking about? Unless the sound just went off. Might be just you. Still, news squawk is still blah, 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 blah. Okay, you can hear me. Okay, so like, the thing that I think is so funny about it is that the classical conception of trading is, I think, mostly correct. And everybody that gets into trading rejects it. Right? So the classical conception of trading is there's some question in the market about the way that certain things are going to turn out. And you come in and you say, well, I know this subject really well. I have a lot of experience and I know that it's going to turn out this way. And then I take a trade based on that piece of information, or piece of news comes in and I try and take the trade as quickly as possible in front of the news. And what happens is all the retail traders come in and they say, no, I'm not going to do that. I don't think that will work. I don't think that does work. I think that reading chart patterns works. What's with that? Why is this is so weird that we're like that? But I think the reality is when I started, okay, well, and I said, oh, I gotta be in markets, like it was just one day. It was like revelation from on high. It's like, Seth, the market is your thing. That's what you're gonna make your life about now. Okay. I'm going to go and I'm going to read and I'm going to be as knowledgeable about this subject as possible because it's an important thing where I can have an impact and nobody's doing it. Well, to me, it seemed like nobody was doing it, but I just thought if I wanted to have an impact in the world, that's where the real power is. That's where I need to be. So I start getting into it and I start learning everything. And I started reading things like Peter Lynch's One Up on Wall Street and things like that. And it comes in and there's like, okay, well, there's a couple of different ways that people trade. And here are the different styles of trading. Some people are swing traders and some people are scalpers and some people use fundamentals and some people use technicals. And I was like, well, I should be using technicals. Maybe because I'm a computer science guy or whatever, but that's what I did is I come in and I say, oh, I'm going to use technicals. Was the exact wrong answer. And I thought that I was being like unique to do that. I was like, well, it seems like that I would be more for technicals and that's like the minority position. So I should go and I do that. And then once I really started to get into the communities, what did I learn? That the communities are 100% focused on the technical analysis, almost exclusively. There was nothing special about my approach at all when I at the beginning. Right? It wasn't until we learned all this stuff about order flow and everything that we really came up with a framework that I think explained everything that we knew. So what's the conclusion? We're prone to want to trade based on signs instead of actually knowing what's going on. And that's what humans want to do with everything. Where'd you go to college? I went to the University of Utah, computer science degree. This all happened like late. This is the thing is this all happened like my last year of school. Because before that, I thought I was going to make video games for a living. Thinking about that now, I'm just like, I'm so happy that that's not what I did. I mean, I think I would enjoy making video games, but the video game industry sucks so much. Like, I look at what's going on at Blizzard right now. Oh, what a dumpster fire. Okay, so here comes the news. They're pulling pretty heavily for it. I'm going to be paying attention to this manufacturing prices paid. It's like they're selling down. So we're higher than expected. No, this news does not make sense. Okay. Wow, that's a lot of movement. ISM manufacturing PMI is 50.2 versus an expected 50. Jobs openings was 10.717 million versus 9.75. That might be why they're reacting so heavily to the downside. Manufacturing prices paid, though, 46.6 versus an expected 53. So that would suggest to me that the manufacturing prices paid would suggest to me the upside. But that is not what happened. They definitely sold it. And construction spending month over month was higher than anticipated at 0.2% over month versus an expected decline of negative 0.6. Yeah, that move wiped out the whole overnight move. But there's something in these numbers that I'm not picking up on correctly because the market reacted very adversely to that. There was a much larger move than I anticipated. Was there a 10K? Yes, I see it. No, actually, I don't see it. I see a 1,526 lots added at 06 half and 22,700 added at 06 half. So at 06 half, which was when we were up here, there was a big, I didn't see there was 10K, but it must have been multiple orders for doing it. We must go up. Well, I am kind of looking at this and wondering if it's not going to reverse. but I don't like trying to play that game. Something about that release, like the headline. So the ISM manufacturing PMI 50.2 versus an expected 50, so pretty close to in line, only slightly above expectations. That's the main headline number. Okay, so I don't think that main headline number justifies a reaction, let alone one so negative, right? US ISM manufacturing prices paid, that one was much less than expected. That would be something that would suggest less inflation in the future. So that one could not explain why the Treasury sold. Or let's not say cannot, but I don't think that explains why the Treasury sold. So the only one that I can see here that could really explain why the Treasury sold so hard was that Jolts jobs openings rose back above 10 million to 10.717 million versus an expected 9.75 million. So they were expecting a tightening in the job market and they did not get it. I think that that's got to be the number that moved us. But if that was the case, we're going to be in like extremely illiquid action here. It's probably not a good idea for me to touch it here in this instance, where I don't really feel like I have a good handle on why it moved that way. I mean, I don't want to take a trade unless I feel like I have a really strong predictor of order flow anyways. But like the liquidity makes it an extra difficult proposition. I'm looking on Zero Hedge to see if there's maybe some explanation. Papyrus IQ, U.S. manufacturing activity grew at the slowest pace in nearly 2.5 years in October, while a measure of prices paid by businesses for inputs slid for a 7th straight month as the Fed's aggressive push to raise interest rates in order to quash inflation cools demands for goods. It's from Twitter, from Papyrus IQ. If you ever get into game development, please make a new Command & Conquer Red Alert. There's fun things about Red Alert. StarCraft is better though. Just go play StarCraft. StarCraft Brood War is still a thing. Now they have the remastered version of it, and they have like a real ladder and stuff. And then these guys, Frost Giant, they're building a new game. Okay, so now they push further down. Man. Well, so far the change is still about 2 basis points. And I'm seeing gold and silver get hammered pretty hard. 6J getting hammered. The dollar index moving up strongly. Now, here's the weird thing is that, well, not a weird thing. Yeah, this is a continuation of the dollar trend. So if we were taking a trade here, it'd have to be based on the dollar, right? 0.25 isn't terrible. It's got to be the Jolts. Ed Morrissey, he's a Republican guy. He's not a market guy. Retweeting Heather Long, I don't know who that is. Just-in jobs openings increased in September to 10.7 million, a surprisingly strong result, and up from 10.3 million in August. Also, it wasn't just above expectations. It was greater than the previous month. The U.S. has had over 10 million job openings for 15 straight months now. Bottom line, the job market still looks strong. No sign of a recession there. Yeah, except for that, I'm not convinced that all of those jobs are real. Wow. Hey, 025 was definitely good spot. They're not to the overnight lows, but they look headed there. Man. Okay. So this right here, that's kind of given me some red flags. So a lot of volume traded there very quickly. It shot right back. They are continuing, but that area, that, like, let's say 04 is making me a little nervous. It's not the kind of order flow that I want to see in a spot where I'm entering. That's kind of, that would be like, hey, okay, this is a good trade. We made 30 bucks here. Let's get out now, right? So I guess my issue now is I'm pretty certain that it was Jolts. I guess the reason why I'm a little slow on this one is because I don't put a whole lot of credence into the Jolts jobs openings numbers. I suppose though it could signal, it's one of the tea leaves that suggests that the jobs number that we see on Friday could be good, right? So that's part of why you can get adverse reactions to it. Well, now that was maybe worth taking. I'm frozen. I'm just terrified to touch it. Now that we're approaching lows, though, it's like, well, giddy up. Okay. Okay, so Jolts just looks at like job listings out there. So like, you know, there's all these people saying that like there's these job openings that people put out that are like unrealistic postings and stuff like that, right? So that's kind of like one of the differences. It suggests that like companies want to hire people, but they can't. And if the Jolts jobs openings are good, then it would suggest that there's also lots of people getting hired, but they're not perfectly correlated, right? But well, I tried to take a continuation and got screwed hard on that one. See, the 04 was the better spot. Okay. So on normally I would have like just immediately puked that, but because of where it came back to, kind of thought, hey, okay, that's like an even spot. So that pullback is kind of makes sense. The ISM price is falling, kind of throwing me off. Yeah. But, oh, okay, so here's another side to it, live action. The inflation is coming from services, not manufacturing, right? So the manufacturing prices paid is maybe not such a big deal because that's not where the majority of the inflation at current is coming from anyways. It helps, but it's not as significant of a data point for us. Okay, now I'm having a problem. I was thinking maybe I would scratch it. No, I lost 20 on it instead. That sucked. I definitely like FOMO'd into it, thinking that we were gonna immediately break those overnight lows, but look, they just came just short of it. Jeez. My concern is still that 04 might be as far back as they come. It looks like that the 2-year has already breached the low, so. Yeah, nothing like good old FOMO. For sure. So if we were looking at like a large meta order, then now would be the time to be like, hold back, wait 45 minutes, etc., right? But because this is like a, market panic kind of a move, could continue through, could flip on a dime. It kind of looks like they're kind of reaching the extent of their impact for now. So I'm a little concerned about how far they might pull back. Isn't the Fed more job dependent in their decision making? Well, their goal is maximum employment and price stability. But how they make those decisions is, up to them. But they have a framework that they use, right? And does that framework, well, I think that framework, if the jobs number on Friday ended up being really good, that would probably cause the Federal Reserve to be hawkish. Yeah. Number of jobs openings in September rose by 437,000 to 10.7 million. The Fed would like to see the ratio of vacancies to unemployed workers declined, and it ticked up in September to 1.86 from 1.68. So he's saying that's really bad. For sure. So basically, Nick Timmerose confirming our suspicions that it was the ISM number. Well, at this point, I think it's more than just suspicions, right? I think we have a pretty good idea. I was trying to take it as she goes when they break, and it didn't. It failed on me twice now. So, given the situation, if I were to say, like, what is the main thing that we should see change based off of all of this? I think that the probability of a 75 basis point hike in December should increase, right? But I'm also kind of wondering, you know, it's saying like, I think that things look pretty good, but like there's a good chance that something comes in and like really smacks us down. And I'm wondering if that was it. I wonder if that was the thing that kind of makes us go, oh, wait a second. How long have you been studying this all again? And what subject did you start on? Well, I was in computer science, right? That was my major. And when the 2008 financial crisis happened, that's when I got interested in markets. So that's how long I've been studying markets for, let's say. Yeah, now everybody is retweeting Nick Timmerhouse there. FX Macros comment the Fed won't like the Jolts jobs number. Wall Street Journal report on worker demand to indicate if labor market cooled further. When will you start upping your ante for a bigger size? I think that I want to have enough extra for an entire other contract overnight before I start upping the size. But I think in this current action, that's really kind of besides the point. Like I was sitting there thinking about like, well, I could take a second contract there at 4.05, right? I would very much like to, but given how volatile this is, it's not really a very good idea, is it? Because this could easily pull back 5 basis points and then go lower, you know? So I think that it's probably better for me at this exact moment, at least, to you know, use minimum size. I mean, look, it's gonna go. It's probably gonna go. I think that this is the kind of news that could really wipe out like almost all of the gains that we made last week. This could be something that runs. I don't know if it's going to run a whole lot right now or this morning, but I have concerns about the next few days. I don't think the Federal Reserve is going to like that number. He's definitely going to bring it up tomorrow on the press conference, right? It's just taking stop losses under support. I like at the moment that the market is kind of suggesting to me that they're having difficulty continuing to move down, even though the flow is probably there. Square root law taking effect here at the moment. And they have to reverse a little bit before they have the fuel to be able to move lower again. But you can see when, like, the thing that kind of tripped me up, really should have taken O2 half, right? The thing that really trips me up is that when they do tick down, it's so fast, right? Like, I was trying to like, oh, okay, maybe when one of those happens, I'll try and catch. No chance to hit into those as it was going. But like, just consider this, right? We're only just now breaching the overnight lows. Okay, so we're just as hawkish as we were yesterday now, essentially. What changed overnight to make us so dovish? A story from China that might be completely fake, right? Whereas if we were to go and, based on the fundamentals and where we've been in the past, the treasury could get all the way back down to, well, probably 110 is your next stop. Most definitely, right? Any change in the Fed Watch tool? We could pull it up here, but it's probably better to give it some time. We'll check that tomorrow morning. Because we know that the probability of a December 75 basis point hike is going to go up. But the question is just by how much. And right now, we wouldn't be able to judge that. See, it's doing this thing where, like, it doesn't matter where I get in at. It's going to be choppy and crappy. Because we missed that initial bit. I could have taken this one. We were like up here. And I was still like, well, I don't know why this is going on. I feel like a really slow. Like, I feel bad about that one because I think I should have been able to pick up on that it was the jolts that the jolts would have mattered. But I didn't. So if you don't have the edge, then this is how you pay, right? But you can see the supports below us are pretty weak, and that the short selling volume is definitely still there. And in fact, I didn't actually see that much of it sell in the 5 years. So I think there could definitely be more flow to the downside. Well, we did move about 20,000 contracts, but I think that this is like a 60,000 contract kind of move. Does that make sense? We'll see. We need to be patient. I'm gonna reset these. The Hill reports even New York is being consumed by a red wave. Oh boy. Yeah, now on S&P 500, how much of a hit do you think the S&P 500 could take here? I think, well, so this is a little bit too far down for me to be making this like if I was day trading type of a target, but 3,800 is probably where the options will take us, right? So a little bit of weight there at 22, but the bid holding it for now. Hope at least 3,800 and then tomorrow bounce back from there. I don't know, man. So I think the thing here is, in my mind, is that my expectations for a Federal Reserve meeting that works out well for the market tomorrow just dropped considerably, right? I think at this point we could say that maybe they were overreacting, but it's definitely the Jolts. And I don't think that they're overreacting. I mean, I think that's a possibility, but personally, I think that the reaction is entirely justified. My theory is that the market needs a little bit of rebalancing and so forth, because the liquidity has just been like hammered so bad here, and that much later in the day they will continue to head down. And like that move right there, man, I'm getting a lot of spam calls lately. Yeah, that kind of move, you like the liquidity let it come up a little bit too easily, right? Gonna say Jolts, jobs, openings, dashes, market hopes. And that's my take on this whole kerfluffle. That's what it is. It's a kerfluffle. What is the exact definition of kerfluffle? What's the origin of that? A disturbance or commotion caused by a dispute or conflict. Squeezing that upside again. Came from Scottish word kerfuffle. Okay. By the way, spreads really flattened. Really flattened. That's why here on this, it's only 10, even though this moved quite a bit. It's the flattening. Did the treasuries react to it accordingly? I think so. At least from the initial reaction. When it happened, I thought, well, this is crazy. I just didn't understand. But now I think I understand, and I think I agree with the reaction. I still have some questions about how reliable that Jolts number actually is. But the thing is, I think that the fact that it actually increased month over month is like a big problem, right? Like, it doesn't surprise me that it's still a high number and everything, but that it actually increased in the number of jobs openings posted over the last month is very alarming to me. So they've reversed back here quite a bit, but like the action seems really quiet now, relatively speaking. Here's another thing. The treasuries and the dollar and everything were all kind of moving before this move. So do you think that that was front running the jolts? Maybe. Maybe. That might be contributing to difficulty in them being able to continue moving down, because I think that fundamentally interest rates could probably get all the way back to 4.2. Ooh, okay. That 2.9, I think there was a little bit of stop runs there. That bar came up pretty quick. All those big unemployment indicators are a bit, well, this one with Jolts is, I think, particularly questionable, right? Like it's been this way for a while, and we know that it does indicate a loose market, that there's a lot of job openings for people. So even if people got laid off, they should be able to find new jobs fairly quickly, is kind of what the straight number suggests. But I think like, and this is why I'm saying I think there's some questions about like that number overall, but those questions may not be immediately applicable to this particular situation. So overall, are there actually 10 million job openings out there? Because I personally, I don't think that they are. I think that some of these jobs might have like unreal, like they're some of these jobs are never going to be filled because they're like unrealistic, right? But that isn't pertinent in this situation, because the whole issue is that the number of openings increased, right? So even if we assume that a certain percentage of the openings that are out there are kind of nonsense, just the fact that it's increasing tells you something about the labor market that is very much not what the Federal Reserve wants to see, right? Maybe in the cashier, I guess it would depend on where the changes are happening to, yes. So they did kind of stumble there a little bit, but it's not immediately turning back into downtrend either. So the dollar, though, doesn't seem to have held back at all. It's almost, well, it did breach 111 at one point. Jeez. No, I don't have my Bitcoin went up. How did Bitcoin do? Oh. These numbers that I'm getting here in the dollar aren't up to date anymore. It crashed. Okay, so I'm gonna have to go off of, oh, I don't even have it on this list. Add instruments, search, BTC. Okay, I'm hearing on the news squawk that shares on the Toronto Stock Exchange have been halted due to a technical glitch. So by the way, I said that there was about 20K cumulative delta change off of that news, but it's pulled back about 10. So what's this? YouTube is the only S-tier social media platform. I agree. It might not be that way forever though. They could be overtaken. YouTube has its issues. They're just not at the forefront. They're largely getting the important things right, like treating their creators well and allow. Whoa, what the fuck? Okay, now that was weird. Something just came in and I think there was like a spoof of some sort that did push the market up a little bit, and it almost immediately fell down through the hole that was left when that order disappeared. And what was it? This is a bid at 28. A bid at 28, and I think they sold into him. That maybe was just what they needed to have the momentum to go down. Squeeze this guy or something. I don't know. That was weird. I've never seen anything quite like that move. Have you? That was weird. It was like it moved up. It looked like there was some market volume behind it, and then they immediately pushed back. The bids just all collapsed, and it immediately traded down. It was a rare move, that's for sure. Yeah. They're still shying away from reaching the overnight lows, though. It's kind of making me think that if the treasuries are able to breach the overnight lows, that you could see some Okay, so the news squawk is saying, an economist now saying that this number will frustrate the Federal Reserve. So that may have been a news-driven move. I don't know. Was unusual action for sure. It definitely turned to the downside too, but they're still frustrating the shorts, right? They're not frustrating the shorts, they're just frustrating Seth because Seth made poor entries today. He is just not on the ball. I've never seen Jolts be a significant number. I guess I'll always remember it now, but only Dogecoin holds up well here. The new flight to safety risk asset, Dogecoin. You got to be careful saying those sorts of things because like that's exactly when it starts to fall apart, right? That's kind of how it happened last time with Doge, wasn't it? Is like it would hold pat when everything else was moving around, and then eventually they failed. You gotta keep in mind that like Dogecoin moving up probably means that somebody came in and bought a ton of it, right? How long are they going to hold it? You got to be careful with those. Okay. Oh, come on. Okay. I'm seeing some market orders try and hit them now. Not quite able to do it. See, because I was a little bit like skeptical of the up move overnight in the treasuries, I'm particularly interested in them reaching the lows. I mean, I guess that means that I feel like that they should breach the lows, right? But right now it's kind of being flaky about it. Some volume does come out, but overall it actually looks like the buyers are winning here. It does seem like that there might be some meta order sells, but they're being super sneaky and less aggressive than the buyers. Dollar still looks strong, by the way. Oh no, wait, no, ignore me. The dollars, I can't see the dollar anymore. I think something crashed. It's my 6J crashed is what happened. But I don't want to mess with that at the moment, so I'll just leave it be for now. I think that if we are going to see new lows, I really need to see the volume come through the 5-year. Okay. I guess after we're gone, we'll get some information from the results of an auction that the UK is doing to unload some of the treasuries that they had bought. That the Bank of England is auctioning it. Some 750 million, I think. Sounds like the Toronto Stock Exchange is still down. Oh, come on. Come on. There we go. Some hitting into the lows. Probably they're going to have to trade 1,000 to breach. You bought some of the dodgy guys. I did buy some stocks last week. I'm kind of sitting here going like, probably a little early. I've been dollar cost averaging, strategic dollar cost averaging, but and it's looking like that on the week it was a good move, but that on the month maybe it won't be. Right? Oh, that's right. Is that one of the ones that they're adding? Dude, when I get those announcements from the CME, I can't handle it anymore. So like the event contracts were one thing, like I understand why they did that, but now they're starting to list altcoins. I'm like, what the hell are you guys doing? Like we don't want to add every trash out there. Do we? I guess maybe they do. I mean, if the people are going to trade it, they're going to make money on it. They're going to do it, but I would prefer that they don't. For Dogecoin in particular, though, having CME futures might not be a good thing for them, right? Okay, why are we dumping stocks? So our top theory, and I'd say it's pretty well confirmed at this point, is that the Jolts jobs openings number that we got an hour ago were not only above expectation, but a gain on the month, higher than the previous month's reading. So the Federal Reserve wants to see that job openings number go down. So there's that, is that the metric alone is a frustration for the Federal Reserve. And then on top of that, it does suggest that the jobs number on Friday could be positive. So the market is getting like a really severe reality check here. So I've been saying that, the flows look good, but that we kind of have to tiptoe around all of the traps. And I think that what just happened there was the first kind of bad, piece of news that could have been bad. One that we normally don't pay attention to, right? One that's usually not very significant. Was like the first little step that we came to, and we just flubbed it. It was just absolutely dismal. I mean, the reaction, I was so surprised by the reaction when it first happened. I was like so confused and like, there's no way this can be happening. This. Now that I've read some of the comments and couple of other things I think I understand, and I think that it was, in fact, the Jolts number. But, ooh. And like I was saying, I think the chances for a Federal Reserve meeting tomorrow where, yeah, they raised 75 basis points, but they're dovish in their comments, I think that just went out the window, right? I don't think tomorrow is going to be a very good day for markets. I need an economy crash course. Why are good job numbers bad for the Fed? Because good news is bad news, and they expect the Fed to, yeah, exactly. Because it suggests that the labor market is still very tight. It suggests that there is some real that companies are still having trouble hiring workers even after all of this, that they're like, the number of job postings out there is increasing. So what does that tell you about the Fed's efforts here? They're not doing a thing. They're not doing a darn thing to slow down the labor market. And that means we probably continue to see inflation. Which means the Federal Reserve likely, you know, in other words, or another way, we have to go back, because the thing that really matters here, like in the long run, the thing that really matters is what is the terminal rate? And everybody's saying that the risks are skewed to the upside with the terminal rate, right? So what did we just see? We just saw one of those upside skews. So is that enough to make them change the terminal rate from 5 to 5.25, 5.5? Could be. So we'll see. I would bet against me. Are you talking about just right now or in general? Because if it's just right now, maybe I shouldn't be in this trade. Oh, for tomorrow. Okay, so if we're saying a bet, if the bet is tomorrow, Fed comments dovish or hawkish. So I'm not sure that I'm going on record saying that their comments will be hawkish. I maybe over exaggerated that. I'm saying that the chances for it to be dovish have declined significantly. Like before, I thought that it was like 70% chance that they would be dovish in the most likely scenario, and now I think that it's like 40% chance. So that still leaves enough room in there that I probably wouldn't put money on it, huh? Well, it looks to me like they are not going to let us see the stop run lower today. We're going to have to quit, and maybe it does it afterwards, and I will manage this. It's so close, right? But they're going to have to eat through those at least 1,000, if not 1,500 there to get through 20, right? So like a 300 offers probably not enough on its own to breach it. They might surprise me, but no. See, and then when it bids back up, 800 bid, right? There's definitely some leaning going on there. But I do need to go, so I'll see you guys tomorrow, and we'll be doing the whole Fed meeting and everything. Oh, there it is. Oh, hey. Okay. See, that's all I had to do was say I was going to go. Okay. Hey, guys. Stay excellent, team.